Welcome back to Mid-Cap Radar. One certain pocket of the market today that's seeing quite a bit of a sell-off is actually the cement pack. Dalmia Bharat came out with its numbers yesterday, a miss as far as the core EBITDA was concerned, and also the commentary in the conference call regarding pricing was something that was quite weak. So if you look at Dalmia Bharat has seen quite a bit of a sell-off today, and along with that, few of the other south-based cement companies, names like India Cement, Ramco Cement, have also seen quite a bit of selling pressure in today's trading. Now moving on, RBI has wrapped Kotak Mahindra Bank for inadequacies as far as its IT infrastructure is concerned that has led to frequent outages by asking it to stop onboarding customers via online and mobile banking and from issuing fresh credit cards. Sources close to RBI say that the regulator wants financial entities to put greater importance on risk management and compliance to regulatory guidelines. Ritu Singh joins us with what she's picking up.
Well, Vivek, this series of actions against various financial entities leading many to question, if a business restriction is the best way to go about dealing with non-compliance and what the bigger picture really is. So we spoke to sources that are close to Reserve Bank of India to understand the messaging. And it is clear, if you look at the various actions that have been taken of late, the focus has been on select areas: risk management and assurance, compliance of regulatory guidelines, fairness to customers, board effectiveness and governance. And the RBI is very keen to enforce these as priority focus areas for all the regulated entities. That is the first message coming in. Secondly, we understand in these cases there is a minimum period of 1 year of bilateral engagements and discussions on deficiencies, with more than adequate time given for these entities to respond before any action is taken. So there is no moment of surprise for any entity involved. Third, the business restrictions, which may end up impacting customers as well, are only taken as a last resort of sorts to protect customer interest when these engagements, warnings or fines are not heeded to. Fourth, on the question of why the action is only against select entities when many other banks or NBFCs in the market may also be at fault or be non-compliant at some level, and we understand that the action is targeted on entities keeping in mind when the non-compliance is persistent in nature and where the impact on the system could be proportionately higher. And so RBI's actions are intended to have what they call a demonstrative effect on the ecosystem. Lastly, if you've noticed, RBI has been giving a very detailed explanation for the actions taken in its public releases, which is most unlike earlier incidents where barely a line or two were dedicated to the reason for regulatory action. And this, we understand, is based on feedback from stakeholders to send a message to others as well to take notice of these issues and fix their house, if not in order, else face the consequences.
Thank you so much, Ritu, for bringing us all of those important details on this very, very important story. But that's all the time we have on this edition of Mid-Cap Radar, Mutual Fund Corner, when we return.